Is the alt season coming? That is a very good question. I think we're very close. And we're going to look at what an analyst is talking about today. So welcome back to the Blockhash podcast channel. Make sure to check out our Substack, blockhash.substack.com, to get all the latest and greatest content from the Blockhash podcast and our channel, me in particular. All right, so let's dive into this article. I'll give you my thoughts at the end, as always. So, alt season may be around the corner, soon approaching, based on an Ethereum pattern. So, in a crypto quant quick take post, an analyst has discussed about why an altcoin season may be coming soon for the crypto sector based on a trend taking place in a couple of Ethereum and Bitcoin indicators. The first metric of relevance here is the open interest, which keeps track of the total amount of derivatives positions related to a given asset currently on open on all centralized exchanges. When the value of this metric goes up, it means the speculators are opening up positions for the coin right now. On the other hand, a decline implies the users are either closing up their positions of their own volition or getting forcibly liquidated by their platform. Now, here's a chart that shows how the trend in the open interest has compared between Bitcoin and Ethereum over the past year. As displayed in the above graph, Bitcoin open interest has been moving more or less sideways recently, while at the same time, the metric has registered growth for Ethereum. This would suggest that Ethereum has been seeing more appetite for derivative market contracts than the original cryptocurrency recently. One of the driving factors behind this could be the news cycle related to the approval of the spot exchange traded ETFs for Ethereum, of course. In the same chart, the quant has also attached data for another indicator, the estimated leverage ratio. Now, this metric measures the ratio between the open interest and the exchange reserve for any asset. The latter is naturally the total amount of the coin that's currently sitting in wallets of all centralized exchanges. The ELR, estimated leverage ratio, basically provides us with information about the amount of leverage that the average user in the derivatives market is opting for right now. From the graph, it's visible that this ratio has seen a surge for Ethereum recently, but also has showing fiat action for Bitcoin. Ethereum price looking good. Where are we at with the Ethereum price today? Sitting at 3,900, almost 4,000. It's definitely pushing higher. I think these are all important factors. Again, I do think alt season is very close. I think one thing that has held it back in particular is not all the money going into Bitcoin, or all the money going into Ethereum because of these ETFs. Bitcoin and Ethereum have been driven because of these ETFs, and because people looking for a place that's stable outside of traditional markets to hold their capital and grow their money. But the interest rates, again, I say this so many times, but they're too high. And the Fed has paused on them and has remained paused for a while now. And it's just too expensive for an average American to speculate. That's why the retail market is not pouring money into the crypto space. Once the Fed lightens up and shows an indication that they want to cut rates, or they actually cut rates, even by the smallest margin, will make everyday Americans, retail investors, more encouraged to pour money into the sector. That's the biggest thing, because crypto is driven by the retail market, not the institutional market. The institutional market is in right now, but they're in just Bitcoin, just Ethereum. They're not pouring money into Solana and Cardano and XRP and Stellar and HBAR and all these things. No, that comes from the retail market. Now, at some point, yes, institutions are going to invest heavily into all these different things, especially the major platforms and the large caps. But you don't want just one massive lump sum investment going into these things. I mean, in some respects you do, but you want trading. You want to see interest. You want people constantly aiming to accumulate and to save and to invest into these assets, as well as use them and create use cases. So again, that's going to be one of the biggest drivers. I do think it'll come. It just might not come in 2024, having those rate cuts. Or something else has got to happen. The U.S. economy has got to get stimulated. Maybe it's the U.S. election. Maybe Trump or RFK pulls out a victory, which it looks like one of them might. That could be another stimulating event for the market. we're getting very close, but we got to look at the possibility that one of those things will be the catalyst, because it's not going to be the institutions. That's only propping up the market, because once they start selling, they will suppress the market too at the same time. We are not talking about that yet. ETFs are both a blessing and a curse. Yeah, let me know what you guys think in the comment section down below on the altcoin season. I do think it's coming. Obviously, things start with interest in Bitcoin, then they move through to Ethereum. And then from there, you see the speculation, and they filter out into memes and NFTs and other cryptos, other platforms. And hopefully that money will stay this time a little bit more than it has in the past, because everything seems to go up, then dump, then up, then dump. I want to see growth. So yeah, let me know what you guys think. What are the catalysts going to be? What are the timelines looking like? I think this altcoin market is going to start to move either right before summer, and we're kind of like right before summer right now. So between now and maybe late June, or as we go into the fall. That's the big thing that I'm looking for, because the altcoin market has been dead quiet. So it's got to move at some point. My guess is in the fall, because when you're leaving for the summer, you're not in the office, you're not trading, you're not investing, you're not focused on the stuff as much. You're spending money more than you're investing it. So I think sentiment from retail will likely come in the fall when they come back and they're looking into the upcoming elections. They're looking into things happening in the market. So that's what I'm aiming for. I'm going to say September. So wild guess. But comment your thoughts down below. Like, share, subscribe if you haven't already. If you have, thank you so much. See you guys on the next video. Cheers.